Hello, traders. It is Friday, June 26th. I'm taking the day off because we are in the summer doldrums. This is a very low probability trading environment. I've been preaching that to you for the last couple of weeks. So it's a good time to just take some time off. If you're watching the market, you're probably going to be forcing trades. It's going to be a very difficult environment to try and make money in. So why not do an educational piece? I get asked a lot, Pete, how do I enter trades well? I really struggle with this concept. Well, if you find the right stocks and you find the best stocks, your entry point is much, much easier. And forget about picking the perfect entry point. It's not going to happen. So if you're really struggling with it, the best advice I can give you right out of the gate is scale in as the profit becomes the position becomes profitable. Start scaling out of the position. Start lightening up your risk exposure, and then the rest of the position will become much easier to manage. And as the stock continues to move higher, you'll be able to continue to lock in profits. If you do that, you won't be as nervous about the position and about picking that perfect exit point. But to go back to the stock part of it, there are some characteristics that I look for in finding the best stocks. So these are the characteristics that I look for when I'm day trading. I want to see a stock that's above the prior day high. I want to see it be able to blow through that resistance. So that's very, very important to me. Number two, I want to make sure that the stock has heavy volume. Heavy volume means that there is a lot of interest in that underlying stock and that buyers are lined up. And I'm going to be speaking from the long side because most people like to trade from the long side. The market right now is still above major moving averages, so let's focus on the long side here. But we want to see that heavy volume. And any kind of move that is coming through the course of the day, the stock's above the prior day high, stock has heavy volume. I can tell you already we've got two very important characteristics working in our favor. Thirdly, relative strength. We want to make sure that that stock is able to outperform the market. So we gauge that strength relative to the S&P 500. And you'll notice on the very far right-hand side of the screen, I have a chart of the SPY up. And if I click on it, this is the SPY. You can see how I have the ability to toggle on and toggle off, and I never lose sight of what's going on with the overall market because it's always right there for me. So we want to make sure that the stock is strong relative to the market. Number four, very helpful if the stock has some type of breakout on a swing basis. So I want to make sure that it's above technical resistance. Now that breakout could have been a major moving average, a 100-day, a 200-day moving average. It could have been a downward sloping trend line. It could have been a horizontal resistance point. All of these would qualify as a nice technical breakout. Now, once it's gotten through that resistance point, that means that the stock has a free path to move higher. Finally, long green candles. Long green candles that are consecutive, one after the other, just like this, are very, very powerful. You want them closing on the high, right like that, and you don't want these candles to overlap very much. No overlap there. When I see two of these together that are that long, I don't even have to see the third one. I know I just need to go in and do something that I call buying stupid. Now, most disciplined traders, they have a really, really hard time with this, but the buying momentum is so strong, you just have to buy it, period. Now, if you're going all out with one position and you're firing everything at it at once, well, good luck with that because in this type of formation, yes, you're probably going to get some retracement along the line. The way I look at it is if I'm lucky enough to catch any kind of a retracement on it, I will be a buyer and I will average my cost. But oftentimes, when you get this type of price movement, it never looks back and it just goes. So at least you've got some part of a position on so you can take advantage of it. And I'm talking mainly about the open also. The biggest moves come in the opening 2 hours of trading. This is when we make the majority of our money, and this is when it is critical, absolutely critical, that you have the best stocks in front of you right away. You cannot go fumbling around for them, and I'll check Amazon, and I'm going to take a look. Yeah, Netflix. Yeah, I like Netflix. Facebook, yeah, well, no, you've got to have searches and you've got to nail these things right out of the gate. You got to be able to flip charts, click, 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 click. Oh, there's one. Click, click, click. There's one. Click, click. There's one. And then you've got your list together. Now you're watching the market out of the corner of your eye and you're waiting for your opportunity to enter that trade. Now, after the first 45 minutes of trading, the first hour of trading, everything starts to settle in. And then you get into more traditional types of trading styles. But if you're looking to catch some moves right out of the gate, I'm going to show you some things that you should look for. So we want to see consecutive long green candles closing on their high with very little overlap. So I don't want this green candle and then another green candle here, and then another green candle here, all overlapping. Sure, that would be fine. That would be a sign of strength, but not the huge, powerful strength that we're looking for. So we'll go through this one more time because each one of these criteria, very, very important, and especially right out of the opening gate, when trading kicks off, we want to look for all of these characteristics. Above the prior high, that means there's no resistance in the way. Heavy volume, relative strength, a D1 breakout on a daily chart, long green candles, consecutive, each one closing on their high and not overlapping. So let's look for some examples. I'm going to move this off screen. I'm going to show you some examples from today. So today we had this stock, SPOT. You can see, yes, yesterday it had some nice long green candles, and once the momentum was established, it continued to push higher. But you can also see that the stock sold off pretty hard as well. Well, yesterday we had a market that was declining. So instead of popping up the S&P chart, I'm just going to overlay. I clicked on SPY, and now you'll be able to see what I'm talking about. You can see how the market was starting to roll over here and sold off really hard. Well, the stock was not able to fight that battle, so it also backed off. But, and I'm going to take this SPY off here, and we're going to take a look at just these opening bars right here. And this is going to be from today. So I'm going to back up and we'll take a look at exactly what the stock was doing earlier today and how the action unfolded. So we had a market that opened downward and the price action was very, very lackluster. So right here you can see that's the opening price right there for the S&P 500, and you can see how it opened with two dojis, and then we had a long red bar down, and then we had another long red bar stacked consecutively. So right now we can see lots of weakness in the last two bars. What did this stock do during exactly that same time frame? Well, it kept going higher. And look at this volume. When I see that combination, I know this is the real deal because on an opening gap higher like this, well, it didn't even gap, it just had a nice move through the prior day's high. Okay, right there, we're through that prior day's high. So I'm interested at this juncture right here because we're through the prior day's high on big volume and I've got relative strength. I still don't have the consecutive candles, but it sure looks like they're getting ready to build. Yes, you just buy stupid because this thing has been able to defy gravity. If sellers were wanting to smack this stock down, they would have done so, done so, done so right on the open when they had the market pulling back. But they weren't able to because the buying pressure was so dang strong. And the volume here, it's either going to, when you have heavy volume, folks, there's either one of two things that happens. You've got buyers or you've got sellers. It's very rare that you're going to get opening moves and have huge volume balanced both ways. It's usually going to be up or it's going to be down. In this case, we could see the relative strength and it points to the upside. So you just have to buy some. You don't have to take a full position, but at least get some points on the board. And know that if the market puts in any kind of a low in here, that this stock is going to go like mad. Well, because you watch the SPY through the corner of your eye, you see that here is a candle, that second long red candle, and the next candle is a bullish engulfing pattern. Aha, that is a strong sign of support. And then you follow up with another green candle and another green candle that negates that red candle and that one. So all of a sudden, yes, you probed for support, bullish engulfing candle right here. Aha, market support. That means this stock should be able to take off right now. And that's right at about this juncture right here. These two long green candles line up. Okay, I'm pretty confident that this stock is going to power higher. It's above the prior day's high. It has extremely heavy volume. I've seen a bullish engulfing pattern on the SPY, so I feel confident that support is in place. And yes, I've got a couple of other candles starting to form. Now, as you see this stock continue to move higher, right up in here, now these are two little red candles and they come into play. Sometimes people would be shaken out, especially if they've got some profits in here. But the first little pullback on a massive rally like this with long green candles stacked one on top of each other, closing on their high, the first little pullback is going to be a buy entry point. So this is kind of a bear flag, but it doesn't really take much time to develop. And ideally, you have the halfway point of this long green candle preserved, but you never got much of a dip. If you'd have gotten more of a dip down to say this point right here, I'd still be a buyer. Into this candle, all right, now I'm not as interested. I'm just going to hold off and I'm not going to continue to add because I'm expecting the market to go higher and I'm expecting the stock to go higher. But just so that you know, if you enter something and it's got this kind of strength right out of the gate, and that's a big move, that is from $255 to 245. That's a 10-point move in just 3 bars on a $250 stock. That's a big move. So this first little pullback, and then we're right back off to the races. And you'll see the stock continue to power higher. Relative strength. Let's do something else. Let's put up the 10 SI indicator. This measures relative strength, and you'll be able to see the overlay. There you go. When the orange line is above 0, that tells us that this stock has relative strength. So it's got heavy volume, relative strength, above the prior day's high, enter the trade. Now, how do I know when I need to get out of the trade? I watch for relative strength and I watch the market. So in this particular instance, you're going to see the 10P indicator. This is the 0 line. It's getting pretty extended on the upside. And this is something that I mentioned to chat room members. And I said, we're starting to see the market kind of hit a little bit of a resistance point in here. We have some red candles inside bars tucked inside of these long green candles. So yes, it's moving higher, but that tells me it's not a very high quality rally in here and that we could see a little bit of weakness. And there's the 10P indicator showing us that the SPY might be ready to pull back. And in the chat room, I said, I don't like what I see here, but I'd like to see us challenge this high one more time. If we get turned back from it, then I think there might be a shorting opportunity. If you're in a stock like SPOT and you start getting into this point right here and the 10P indicator is spiking, it's telling you, take some profits, take some money off the table. Conditions are changing. Market first. Market first. Market first. If you watch enough of my videos, that's going to be ingrained in your head. You should never, ever, ever be trading a stock without knowing exactly where the market is or what it's doing or what your opinion of the market is, because that's what feeds all of our stock trades, our day trades. And when market conditions are changing, that means we've got to be relatively passive. We got to start locking in our profits. We have to err on the side of caution. We still are not getting short. We need technical confirmation before we can get short. But if you're only trading from the long side, this would be a problem. So, and I post those comments. So now all of a sudden, we started to see this candle right here was starting to challenge the high of the day. It doesn't look like it, but this was a long green candle for a while, and it looked really good. And then all of a sudden, it soured, and it closed on its low with a tail above body. Tail above body, tail above body, tail above body. That means that every time the stock has tried to rally, the SPY in this case, smacka, smacka, smacka. Sellers are coming in and they're nailing it. So it doesn't matter if it's the SPY or the stock itself. When you start seeing long tails above body like this, that's another sign of resistance. So in this point right here, I would be taking profits on spot. And let's scroll forward and see what spot did. Well, lo and behold, it's right about in here. That's a good place to take profits. And now the sellers, because the stock has run so high, are starting to get the upper hand. You've got profit takers in here who are going, man, I'm so happy with the gains on this stock. What am I going to wait around for? The market looks like it's starting to soften. I don't like this. I'm going to get out. I'm going to take profits. It's exactly what you should be doing. So this indicator tells us when we should be long, when we should be taking profits on our longs, and ultimately when we should be shorting. So we're going to take a look at a couple of other stocks, and I'm going to try and give you a few other examples of what to look for. And INO is a good example today. Now, it's been a great example as far as a stock to get long. Here you can see relative strength right in here. I'd have to zoom back to that time frame in the SPY, and it would take me a long time to do that. But if you've got the market, I can just do the overlay on the S&P 500. And here's another classic example. So you have INO, okay? Stock gaps higher. Okay, through the prior day high. Okay, got two of them. Wow, big volume. Hey, that's kind of nice. And look at this long green candle here when the market is what? Selling off. This gray line is the SPY. This is an SPY overlay. So market is selling off, but I have the stock wanting to go higher. That's a great sign. When this thing makes a new high of the day right in here, that's an excellent entry point because you also have the S&P 500 starting to rally off of its low. Whoosh, stock is gone. So now what do? Well, if I had the 10P indicator up here, then you'd be able to see what it was doing at this particular juncture. But then you just have to start scaling out of the position and setting your target profit on it. Profits are much easier to manage than losses because now all of a sudden, so if you've got a profitable trade, it's easy to exit those trades. You just start scaling out of the position. You start feeling good about it because you're taking money off the table. That's easy. It's when you get behind on a trade that's very, very difficult. And that's why the majority of this presentation is going to be related to the entry. If I get my entry down, then I don't have to worry as much about the exit because I'm making money. So, excuse me, the stock continues to move higher. You start setting your targets and scaling out of the position. So let's take a look at INO today. I've got another good example on what it did today and us being able to identify that relative strength. And so you can see, and I'm going to go into chart right here. I'm going to fast forward because I wanted to make sure that I was capturing that particular moment in time. And we'll take a look at what the market's doing right here. I'm recording this Thursday during market hours. You can see we had a really nice market breakout. So, Pete, you talk about this 10P thing. How does that thing work anyway? And I don't get a good read on it. Here you've got a nice little market dip right in here. Just happened. Look at this. Get a nice little 10P cross right in here. Whoa. Was that a nice signal right in here? Well, how do I know that this is the one? Because look, it crossed right in here. It's said to be bullish right in here too. And let's draw that cross here right here, because we've got to watch what the market's doing. It's saying get long right here, okay, because that's your first cross on the 10P indicator. Well, I need to break out through technical resistance. I've got a very strong horizontal resistance line there. Did it break out? No, it didn't. Okay, so I'm just going to wait to see if it does break out. I'll put an alert line right there, and if the market does break out, that could be a very, very good buy signal. You can see back in here, you did have a nice little cross right in here. Then you've got a bullish hammer. Well, does that mean that I'm going to buy right away? Once we get above the halfway point of this long red candle, then I would feel more confident buying. You get through this downward sloping trend line right in here. Okay, I could buy in here, but you could see that that rally was pretty short-lived. as you start getting into a flat market, you can take profits or just go to the sideline because that signal has kind of run its course. So in any event, once you come into this point right here, you still have downward sloping trend line right in there that you can draw. You get that long green candle right there closing on its high, and you get this big liftoff in the indicator. And now you're through that horizontal resistance. Yes, 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 yes. Right here. Right here. You want to be buying right here. And look at how early you were on that move. Beautiful. Great. So when you're looking for an entry point on a stock, you use exactly the same type of information. And so right now, let's just go through and see if we've got anything on heavy buying. I'm sure we'll have some stocks that are moving like mad. We're just going to be looking for relative strength. So why don't I go into relative strength 30? We've got two stocks. We don't have 50. We've got two. NVIDIA. Ooh, really nice. I'm going to take off this SPY overlay to kind of clear up the chart a little bit. But look, this stock started to lift off back here when the market started to gain some traction. You can see this downward sloping trend line. So you start seeing this on the relative strength search. Yes, NVIDIA is a good one. And so that would have been your entry point. 1, 2, 3, 4, 5, 6, 7. This is the seventh candle. 1, 2, 3, 4, 5, 6, 7. So this would be your entry point right here. And you can see how that also coincides with the new high of the day, which is, if you're looking at charts, is a great place to put your alerts so that if the stock makes a new high of the day, you get a pop-up alert. Okay, well, if I'm in here somewhere around the 375 area, and right now I've got a $3 gain in the stock, I should be taking profits. Look, this red candle almost engulfed that green candle. So that's a sign of some selling pressure. So I'm going to start to lighten the load right in here. And you've got this unbelievable spike in the 10P indicator. So now we're getting to a point to where it's telling us, you know, you should probably take some profits right here because this thing is spiking like mad. That's how it works. We're going to take a look at PDD. That was a really nice stock. I did want to take a look at INO because that's set up for a really nice example. And that example came earlier in the day, and you had the market moving lower and you had the stock compressing very, very tightly right in here. And you could have a nice horizontal line drawn across these tops, or you could have been buying as you saw that relative strength right there. You can see the orange line is above zero. I'm going to put the SPY up. You'll also see that the SPY at the time was drifting lower. So take that time frame right in there and this time frame right here. You could see the SPY was trending lower. The stock was flat, had tails under body, nice little tight dojis. As soon as the market finds support, whoosh, gone. Okay, that's how it works. That's how your entry points work. And so if you're in here and buying on that relative strength, where's your stop? Well, your stop should be close by, probably at the bottom of this long green candle. You should be able to find support right at that level. So you've got a very, very tight stop, very limited downside. And as soon as the market gets its legs right in here, the stock lifts off. Here's what you have to watch for. I'm going to give you an example of this too. You have to watch to make sure that the stock does what the heck it's supposed to. If you get a market liftoff and the stock does this, flatline, done, out, see ya, move on, go on to the next trade because it didn't do what it was supposed to do. Don't look at what the stock's done in the last month. Don't look at what it's done in the last day. Don't think about how much you love the stock and you love the product. Get the heck out. If you're day trading, you're just trading off of technicals. I got the market move I wanted and the stock did nothing. See ya. Let's find a better one. And then you move on. So you must have time stops in place. The way I look at it is that if I have a trade on, my entry point is impeccable. By the way, you're only in control of the trade 2 times during the course of the life of that trade. One is before you enter, and one is after you're out of the trade. The rest of the time, the market and the stock are going to do whatever they want, and you are not in control. So, given that, I like to be very, very patient on my entry. I want to make sure I absolutely nail that entry point from a timing standpoint, that I've got the market coiling, that the market's ready to release to the upside, that the stock is showing me good relative strength, that it's continuing to tick higher, that I know the buyers are in place. And then when I buy, I know I get that market liftoff and the stock should shoot 20, 30, 50 cents higher right away. That gives me cushion to put my stop where my entry point was and to have zero downside and as much upside to the trade as I want. So the entry is critical. So let's take a look at another stock here. I just showed you NVIDIA. Let's go and take a look at what Netflix is doing. Here's another example of relative strength. And you've got this market liftoff in here. You've got a couple of resistance points right here. And I'm going to take that major moving average off for the 200-day moving average. You're going to notice something with this play, something I don't like. You're going to notice that the stock is not through the prior day's high. Actually, it is through the prior day's high. It's not through the high of the day. So as long as it's above the prior day's high, I'm still interested. But it still has to get through this resistance point here. You have some technical resistance right in here that you can draw. Draw that downward sloping trend line. You can use alert lines. As soon as it breaks through that downward sloping trend line, then you can actually get into that trade and place your stop below that trend line so that if the stock reverses, like on this long green bar here that poked through, there I would definitely be looking to exit that trade if the opening from that long green bar were violated. That's how I would trade that. So nice, consistent, moving higher. Now we're challenging the high of the day. Bearish hammer. Got the market backing off a little bit. This is where you should be taking profits. You got the 10p indicator spiking. Okay, I need to take some money off the table. I'd be doing it right here, right now. I wouldn't be waiting around. We have had a lackluster day today. We know that the context of the overall market the last 2 weeks has been tight ranges, not a lot of movement, chop back and forth. So you should expect that these moves are not going to be sustained. If you're looking at a rally off of the March low, when the market had been absolutely buried, then you could go, yeah, each one of these days that's rallied, we've seen 100-point S&P rallies, then you can stick with the position and really ride it on the notion that the market's going to continue to push higher and higher and higher. That's not the case right now. The market is sideways. It's going nowhere fast. We just had another stock that came up here. NVAX, I think we've already looked at. That's been a high flyer. Let's see what else we've got on heavy buying in here. See if we've got anything else. FSLY has been just a crazy bullish stock in here. So that's been moving higher. Looking for something. TMUS is a boring old utility stock that had broken out. I do have an example that I want to show you, though. PDD was another good example from earlier today. I noticed this one. It looked really, really good in here. And I'm going to put that SPY overlay back up so that you can see what the stock was doing relative to the S&P 500. And so you have the stock above the prior day's high. Long green candle, long green candle, long green candle, no overlap, pretty decent volume. Not great volume, but pretty decent volume. You could see a little bit of volume on the close yesterday. So this stock really looks good, but it doesn't look fantastic until I see this. S&P down, 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 down. Stock up, up, up. Well, where should I buy? I don't care. Buy some here, buy some here, buy some here. Start scaling into the position, because as soon as the S&P finds a bid right in here, you can see how it starts to rally. Whoosh! Off to the races. Hello. That was from $86 to $87. I'll take $1 profit on that. Thank you very much. You've got your last long green candle engulfed by this red candle here. I'm out. I'm done. Thank you. That was a great trade. By all means, if you start drawing upward sloping trend lines like this, visually, you can see you've got to be out of that trade in here. And then it reversed downward. So you've got a nice downward sloping trend line here as well. But what's the problem with this? The problem is you don't have relative strength. You can see how that orange line is below zero. So even though you have this, I wouldn't be buying that breakout right there because I don't have relative strength. if I had relative strength, then I would be. So that's how you do it. Now I'm going to show you another instance where earlier today I was looking for that pullback that we had on the S&P 500, and I thought that that dip might gain some momentum as we go down and test the 200-day moving average again. So what I did was I shorted Disney, and I saw this move in Disney. Everything looked good. You had this big gap down. The market was down. The stock had gapped down. And then I started to notice that we had the market weakness that I was looking for, and I got short right in here. And I expected that on any kind of market weakness that this stock would test that low of the day. So I had to weather a little bit of a storm because it came right away and the position had moved against me. Now I've got the market weakness that I was expecting, that I was looking for. You can see that the market was not able to make a new low of the day, not even close. Again, the market is the gray line, that's the SPY. What did the stock do? It stalled out right here. It did not want to go down. So I scratched the trade. That was it. I'm out. I'm done. The stock did not do what I expected. And it was a bad trade because you could see how it popped initially. So my entry point was not that good. And when it did finally have a chance to show its true colors, the market looked like it was going to fall apart, and it didn't. I didn't waste any time. I just got out of the trade. Even if it were a loser, I would have gotten out of the trade then as well. So you've got to make sure that you're finding the right stocks. And the trades that you want to make from a day trading standpoint, the best ones are going to come in the first 2 hours of trading. Sometimes we've got to get our market bearings and we don't know what the market's going to do. So we've got to wait and wait. On a day like today, where you had a market pullback, right now with the market being relatively stable, I will tell you that the best pattern that we've had every day for day trading is a down open. When you have a down open, relative strength is very, very easy to spot because all you have to do is look for stocks that are up for the day, and you know instantly they've got relative strength, and if they're above the prior day's high, hallelujah, this thing wants to really go. On days when we have a gap higher, everything looks strong, and then relative strength is much, much harder to identify. So yesterday, we had the market pulling back, and there were a number of little rallies like this. I was able to go in on each one of these, and I was able to buy some stocks that had really good relative strength to them and make money doing that. But once I saw that this low was taken out, I knew that we had a bearish trend day in store, and I had to temper my long positions. But typically, these little down gap opens have been our best opportunity to make money. You wait for support. Typically, you're going to wait for that 1OP indicator to get buried like that. And as it starts to get buried, that's when you want to start scaling into some of your long positions. And the stocks that I was in yesterday, you would think, oh my God, what an idiot. The market's down and he's out here trying to pick bottoms, trying to find relative strength and trying to buy stocks. He must have had his head handed to him on this market drop right here. No, I actually was in the right stocks because I found them using the option stalker searches. And I'll show you an example. WKHS was a really good stock yesterday. I think it might have performed okay today. We'll take off that SPY overlay for now. We're going to back up, take a look at the action yesterday. And the stock came up on the searches. It was beautiful. And we should be almost back to that opening price, but you'll be able to see that strength. It also had a nice breakout on a D1 basis. It was above the prior day's high. It had really, really good volume for the stock. And there we go. So, market down, down, down. But by being in the right stock, you can see this is what the market did for the day. It got hammered. What did the stock do? Up, up, up. That is relative strength. When you see this combined pattern, you know this thing wants to go higher. So I felt that the 1OP indicator was ready to cross, and at about this juncture, I started to take a position. made some money on it. Then the market came back again, got back in the stock, made some more money in it. Even though the market was going down, I made money on the stock. If at any point the market had actually gone up, whoosh, rocket fuel. So I don't like to trade against the market. I don't plan to trade against the market. But if you pick these stocks and if you look for these criteria, you can be wrong on the market. You can get the market wrong temporarily, and you can still do just fine with these stocks because they have the right characteristics that you need for a successful trade. So if I'm in a situation where I get long right here, and I see the market pulling back and I think the market's going to go higher and the bottom falls out of the market, and let's say that the stock just holds its own, I'm going to exit right here. I will consider myself very lucky to have been in the right stock that's got relative strength. I was wrong on the market. It didn't bounce yet, and I didn't get my head handed to me. But if I had gone in and I had bought S&P 500 futures, I would have lost my shirt right in here because I was early. This is the edge. This is the edge that we use. It's so incredibly powerful because it gives me an opportunity to be in the market to perhaps get that bounce wrong and not have my head handed to me. And in this case, even be able to make money on that trade. But yes, if the market's going down and this stock is staying flat in here, you want to get out because you're on the wrong side of the market. Then you would wait. You would wait for the market to put in a true low, and then you would be looking for an opportunity to get long a stock like this. So that's how we time our entry. Again, it all comes down to this 10P indicator. And I was asked this the other day, Pete, if this 10P indicator is as great as you tell me it is, I mean, look at that bearish cross right there, get a nice little pullback. That's a good little entry point right there. Look where these entries are. They're perfect. They're right on it. Here it's saying take profits, be a little bit careful. Market goes sideways to down. Eventually get your nice cross in there. The market goes higher. If this thing is so dang great, how come you're not just trading the futures? So futures are all over the dang place. My edge is in the individual stocks. Large institutions who have massive portfolios, they trade the S&P 500. You've got trading rooms, Goldman Sachs, all the institutional trading desks, they've got program trading for the S&P 500. They're trading sectors, they're trading baskets, high frequency trading, they're in, they're out, they're all over the place. That's not an environment that I want to be competing in. Do I trade futures? Yes, I do. It's a very small percentage of my activity. If you look at these large institutions, they are not going to mess with most of these stocks. There's not enough money in it for them. But for me to trade 1,000, 2,000, 3,000 shares of a stock, oh yeah, I'll do it all day long. There's plenty of profitability in there for me, and I'm not fumbling over them, tripping over them, and I'm not subjected to the same type of chop that you're going to get in a very thick index like the S&P 500. I'm going to look for the stocks that are leading this charge higher, or I'm going to look for the stocks that are leading this market sell-off. And by being in those stocks, I'm going to be able to make much better money, and I'm not going to be shaken out when I've got these little blip rallies in here because the stock is going to continue to melt down in a very steady action. Relative strength is a tremendous edge. It's the basis for everything that we do. I've got the searches to help us find the relative strength, help us find the heavy volume situations. I've got proprietary buy and sell signals. All of these come together, and that's why these searches are so effective. So when I'm day trading, my favorite searches right out of the gate, we're not in earnings season right now, but after earnings is definitely one of my favorite searches, and I caught a really nice move in RAD earlier today, RAD. And there we had the downward sloping trend line. We had some relative strength coming in here. It's long in there. Really nice position. But in any event, after earnings is a great search because this shows me stocks that have reported yesterday after the close or today before the open that have relative strength and that are above the prior day's high. these stocks want to run. When you have 100 companies that have announced earnings, this search will help you quickly identify the best prospects. Given that we are not really in the meat of earnings season right now, my favorite searches right out of the gate are heavy buying for day trading. This is going to show me stocks that have really, really heavy volume and are above the prior day's high and have a couple of other really good characteristics. I'm going to be using relative strength more after that 30-minute period because this is evaluating the relative strength over the last 30 minutes, excuse me, and that in the first 15 minutes has some overflow impact from the day before. But after 30 minutes of trading today, yes, I'm going to be able to see that relative strength. And when I like it the most is when I've had a market move in the last 30 minutes. So if I were looking to short this rally and I thought this were a buying climax and that 10p indicator is really spiking right now, the search that I should be running is relative weakness 30. So over 30 minutes, the market has done this. Show me a stock that has done exactly the opposite. Show me a stock that wants to go lower. I'm going to click on J&J because it's down for the day. You can see it's been down, mark it up. Okay, that's relatively weak. Facebook's on the list, but it's up for the day. It hasn't done much, but it's drifting a little bit lower. CHWY, we'll take a look at that one. There you can see that's some pretty nice relative weakness, but a very, very choppy stock in general. So look for those searches. If I'm looking for something to short, this would be the search that I run. And my final search that I like to run is bull run early in the day. So my 3-day trading searches, heavy buying, relative strength 30, and bull run. And bull run, these are going to be stocks that are just off the charts strong, have absolute momentum. I'm going to click through a few of them so you can see. And the ones that are at the top have the greatest momentum. Glad to see Microsoft up. Early this morning, last night, I released my weekly swing trading video, and Microsoft was one of the stocks that we sold a out of the money bullish put spread on. I really liked it for a number of reasons, and that early dip that we had this morning was just enough to get us filled, so that position is looking like it's in great shape. But these are the searches. You've got to find these stocks right out of the gate, and these are the 3 searches that you can use to find them. Pop Bull is excellent also, but I do use that one a little bit more for swing trades. So I hope that this lesson has really helped you identify the types of characteristics that you should be looking for in the stock. If you find the right stock, your entry point is going to come naturally. And if you look for that relative strength and you look for the market opportunities and what the market's doing and how the market is lining up, you're going to know when that entry point is optimal. And when you get in and the market's been pulling back and you get into that stock that's got the relative strength, as soon as the market finds support, boom, you're going to have a 10, 15, 20 cent cushion, and then you're able to put your stop at your entry point. Once you've got your stop and your losses covered, the upside is so much easier to manage. As long as the stock continues to have relative strength and as long as the market continues to be flat or move higher, I'm going to stick with the position as long as I can. When the stock starts to run out of steam and it starts to hit some resistance, I'm going to be looking for the telltale signs, which would on a 5-minute basis be a bearish hammer. It could be a bearish engulfing pattern. Any of those types of bars will tell me, hey, this stock's running into some problems here. I should probably take some money off the table, leave a little bit, let it run, and I'm always going to be watching what the 10p indicator is doing. If it's spiking, 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 and starting to trough, then I need to draw my upward sloping trend lines, identify my support levels so that if the market starts to roll over, I'll know when to actually start looking at the short side. So again, I hope this helps you with your entry. I hope it helps you identify the right types of stocks that you should be looking at, and I hope that it helps you with your exit. Scale into positions, scale out of positions. There used to be minimum ticket charges. They would kill you. You know, it'd be a $5 minimum ticket charge, a $10 minimum ticket charge, and so you couldn't scale in. You couldn't do 50 shares and 100 shares. You had to kind of have an all-in or all-out mentality. These days, it's 0 commissions, so that's not a factor. Do 50 shares, do 20 shares, do 80 shares. It doesn't matter anymore. Scale in and scale out, and then you won't worry about finding that perfect entry and exit point. And by all means, if you're trading on the open and you get a market pullback, a gap down on the open, and you see a stock that has two of these long green candles stacked one on top of each other, little overlap, heavy volume, buy that stock. Buy that stock. Try and buy any pullback in it because it's going to continue to run higher than set your targets. I think you're going to make some really good money right on the open. I hope everybody has a great weekend. If you like this video, please give it a thumbs up. All educational content today. I'm trying to help everyone to become a better trader. That's why I originally started this YouTube channel. I am also going to start posting some trades on my Twitter feed. Maybe I'll do one or two trades in the morning. I always post my pre-open market comments on Twitter, so please make sure that you sign up for that feed as well. Have a great weekend. We will see you maybe Sunday night. Maybe I'll do a new video. I'm for sure going to be releasing my weekly swing trading video to the public on YouTube on Saturday, so watch that. But I may do a video Sunday night. Thanks so much. We'll see you then. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.